Hey everybody, welcome. It's Chris Sanino again. I'm here with Mark Woodring. This is REIal Talk. That's REIal Talk with real estate investors. Episode 39.
Wow.
Yeah, we've been here. Yeah, 39. Yeah, we've done quite a few of them together.
Yeah,
and
absolutely.
I know I've
Love it.
been on a couple. You've been on a few more. So yeah, really happy to be here. So today we're going to be talking about COVID-19, and I'm sure you're tired of talking about COVID.
What is it now?
COVID. I've
somewhere.
heard that somewhere. But no, the effects of COVID on real estate, changes for the good, the better, the worst, all the above, and how to kind of navigate that as a real estate investor. Just a few points. I mean, we could have probably talked for hours and hours on this topic, but just the key ones for the people that have done business with us or thinking about doing business with us here at Freedom Real Estate, family of companies. And kind of what to expect and what to look for and kind of where our headspace is at to try to help you. First topic is hard tangible assets, real estate. It's a little bit different than you were saying. It's a little bit different than just stock, bonds, mutual funds, right?
Yeah.
You want to touch on that a little bit?
Yeah, absolutely. I mean, so even though amidst COVID, interest rates are still relatively low.
Right.
So borrowing money is easy. You have a great interest rate on properties. Property values are still continuing to go up because, again, people need places to live.
Right.
I mean, one of the things that you're going to see, whether it's here in Dayton and Cincinnati or anywhere throughout the United States, is that because of COVID, like pushing, some individuals having to work from home,
right,
you start realizing that your home isn't exactly workspace friendly,
right?
So that you need a home office or you need your kitchen redone so that it doesn't look, bad maybe for, imaging or whatever reason.
Right.
And so people are looking to get out of their homes, and then just even with that, maybe people are refinancing homes to pull out equity to purchase passive income, because that's one of the things we do, obviously, the turnkey properties.
Right.
And you and I had talked and touched on that as well, is that, investors prior to COVID, we're of course interested in passive income and that, but now we're seeing that people, you're staying home more often.
Mm-hmm.
You can maybe browse a little bit in between your actual work, and you start taking a real look at how can this asset pay off to me. It's something that you have. It's going to be increasing in value. Mm-hmm. You're going to get some income from that, and you start putting together a game plan of like how you're building your portfolio. And so
yeah, you said a couple things there I kind of want to touch on. So for those of you who don't know, like I manage Independence Property Management, which is one of our 7 or 8 companies. What day a week is it? We might be at 8. No, so 7 companies. And obviously, so I have the mindset of a property manager and how to grow assets and make them perform. And so you touched on, like people that had a 3-bedroom house for a husband, wife, and maybe 2 small children. All of a sudden now one or both parents are working from home. They don't have an office space. Immediately they're like, well, we need to have utilizable space for this specific thing because our situation's changed. Yep. Pops isn't getting up and going to work at 9 o'clock in the morning or whatever time people go to work these days. So they need to get a bigger place. So that makes, agents like you and me a little bit more able to serve them, but also means that now there's demand, right, in our market. Absolutely. So even through COVID, real estate has been booming.
Yeah, still the scarcity issue. People
are buying. There's more people interested in buying than there are people wanting to sell, or more than are being built. There's only so much land, right? And then the flip side of it is if you can't buy or you're not in the economic position to purchase, because some people aren't, then there's rentals, right? Which is a huge opportunity for people that are actually okay in their home, but have residual income, or they have the assets available to purchase real estate and provide housing, which is one of the things we do here. We provide housing. So there's a demand to purchase, not very much on the market to purchase. I'm sure you could back up on that.
Sure.
And then there's a huge rental market demand. So, I mean, in the midst of COVID, we probably rented 140, 150 units last year. Right. Now, some of those were new acquisitions that weren't like turned over, but That's a big deal. That's
Yeah,
a lot of
totally.
leases. That's a lot of people moving into new areas to accommodate the changing household size and demands.
I
So
know that some people, and I don't know if you see this or not when the rentals, um, sometimes you go to sell your house just because you think it's at the top of the market, which right now, I mean, you never know. Every day could be the top of the market.
right,
And so you sell your house, you don't have another house to move into, so you may have to rent for a while
right,
just to and make sure that you get that next house that you're going to. So,
right.
I mean, the rental market is something that's never going away. You know, people always need to rent. Dayton and Cincinnati is a great area. A lot of people are coming and going. I mean, Dayton's just a great market for rentals in particular. You know, low taxes. I mean, we're here in the Midwest, so they're not outrageous rents. And we have a ton of business just showing up here in Dayton. I mean, I'm pretty excited.
Yeah, that feeds into that feeds into security real estate.
Right.
Like even I think even last week there was an article that Danny, our co-founder, posted in one of our group chats that I picked up through some investment network. But like there's Hollywood companies that are moving to Dayton, setting up camp and studios here in the next year. Middletown, one of our sub markets between Dayton and Cincinnati, they're building this huge entertainment multi-complex that's going to have all sorts of entertainment, and I mean, expecting some serious job growth in that market. There's a lot of things coming. I think we had like a full podcast about all of the potential in Ohio, but that feeds back into like people have to have a place to live, right?
Yeah,
So I mean, ultimately, it comes down to like people are buying, people are selling, people are renting, and they're doing it from a long-term position. COVID, its effect on that changes people's decisions on how they're buying and how they're selling. Their reasons are different. Why people are renting, what people can afford when they rent or when they buy have changed. There has been some interesting, at least on the rental side, there's been some interesting problems we've come across with verifying income because people are their immediate job loss, or they were working 40 hours and now they're only being able to clock 20 or 30 because the companies that they work for can't sustain employees, or it's the other end of the spectrum where they have limited employees, so the ones that are willing to work, they're working 50-60 hours a week. So we've had some interesting like verification for applicants. Residents that have been long-term tenants have all of a sudden had substantial job loss. Sure. Sometimes even because their kids are at home and they can't afford childcare. And now they've also lost their job because they are having to call off to take care of their children. So there's been a lot of things that have kind of gone into the rental side of things that have made it difficult. But at the same time, it's still very rewarding. Even today, we had a client that we've kind of mentioned previously that had a portfolio that was struggling. Actually, out of the 6 of the units that he had, and he had a diversified portfolio with us. He had a couple single-family homes and a couple duplexes. Over the course of the last year, all of them have gone vacant, except for one, right? And then the one that wasn't vacant, she is going through some familial issues due to COVID and a few other things that have affected her income. So then all of a sudden she's not paying. Now this owner is in a lot of pain, and we can sympathize with that. And it's a bit of I mean, you've been involved with some of it. You know who I'm talking about. And it's been hard. It has been hard for me to help navigate because I completely understand and feel what he's going through. But it was also something that was not really avoidable. Like it was, I mean, 3 people losing their jobs or having issues with payment because of unsustainability and other things. It's a real thing. But the good thing is like today we got a pretty substantial check from a local agency that's going to help that person catch up on their rent. So they're going to catch them up. They're going to pay them forward a few months, and she's set. Right, and the owner's going to get a check, and he's going to be happy, and that person's going to have a place to live and some security to their asset, or the asset they live at, and that's just some of the real pains that we've gone through and our clients have gone through. So rent collection's a bit of an interesting thing. I will say that we, as IPM and our owners that we represent, we were actually fairly fortunate. There were lots of people that had to get evicted over time for non-payment if they were not able to do the necessary steps to get assistance. But overall, like we're still above like 93% occupancy overall for the year. And that 7%, there's a lot of acquisitions in there, people that we haven't rented initially. So there's a lot of interesting things going on there, but post-COVID, there's still a lot of money, a lot of assistance out there for people that have had income loss.
I was going to say, have you seen, rents change, going up, down?
Yeah, up. Yeah, up. Yeah, part of that, like we were talking before this, that a part of that is, the rents are set not only by market and market demand, but also appreciation of the asset, the value pricing. So on your end, I'm sure you can attest that the prices are inflated a bit, probably substantially. Some of that's real, some of it's not. I know we've had some appraisal discussions over the last few months, but it's the same with rentals. I mean, actually, for investors, there's the 1% rule that we talk about a lot, that your rent prices should be within 1% most of the time of the value of the home. So if the value of the home goes up, the value of the rent goes up. Now, we're not going to zestimate this with Zillow, okay? But, what you read online isn't always what the rent is. Like, you have to do your due diligence, and that's what we do. So we manage 530 properties roughly, or units. And so we manage enough that we're able to kind of pull off of what our performance is to see what the market's like, and we gauge that against the actual assets in the market and see what other companies or other owners are getting in the same market. But overall, they've increased quite a bit.
Yeah, I know that, when we were taking a look at some of the acquisition side and doing that 1-to-1 rule, it was getting tough.
Right.
Because, again, the home values were going up and the rents were not
going up to the same rate.
Yeah. COVID, they weren't. So what you're saying for, our future investors and current investors is hang in there.
Yep.
Right? Like, you see a positive future, outcome coming from this, that rents are going to start ticking back up as well. So it's going to even that out, that 1% rule.
Yeah.
There's definitely be some properties still to be acquired, and, as we grow. Right? I mean, so positive outcome?
Yeah, positive outcome. And, you mentioned, like, I'm going to use an example of we have a $180,000 home, that doesn't mean we're going to get $1,800 rents. And, you and I have that conversation quite a bit. Like, hey, Chris, this is what I'm looking at. This investor wants this. Let's be real. What are the rents? I might come to you, and I think we've had this conversation, and we're like, hey, realistically, we're not going to get more than $1,200 for this. You're like, oh, come on.
Right.
Give you 15, man. And I was like, nah, I mean, reality is, like, next year, 2 years from now, when I go to rent this, it's not going to rent for 15. It's not going to rent for 16.
Right.
It could, right? But we want to grow into that, right?
Sure.
You don't want to buy pants that are perfect fits right now. You want to grow into them, right? Right. So it's the same thing. It's like, the rent says $1,200 is a high end. We're going to see some appreciation there. We're going to see some, finger crossed value increases if we work the market right. But we want to be able to protect our investments and our investors, and make sure that it can re-rent on the back end. So we're gonna be competitive with renting, but we're also gonna be real. I could definitely go and say, I'll rent for $1,800 all day long. We may even get $1,800, but when that tenant moves in a year, 2 years, 3 years down the road, is it going to re-rent for that, or in a worse position down the road? We want you to be in the best position possible. So COVID definitely has made that conversation in this building when we're talking about acquisitions, and before we even get to a turnkey product, having that rent discussion several steps along the way. So we're setting the expectation clearly of what to expect. And then even after the sale and during the sales process, when I'm introduced to the owners, officially in an official capacity, it's some of the same thing. It's like, hey, like this, we've done this analysis, we talked about this many times, this is what I think the rent is, this is what I would do, this is what you can expect. We didn't do that a year and a half ago. I think, and it's not because we couldn't, it's just that there wasn't much of a need, right? Now there's a need. Hey, I'm really nervous, this property is $180,000. Is the rent where it needs, like this and this? So we start talking about things deeper than cap rate investments, where you're looking at a measly 6%. Okay, well, the reality is like, if we get the rents here or the property performs this way, we're sitting at an 8 or a 9, right? So it kind of changes how we go about discussing the sale of the property and what it's supposed to do down
Yeah,
the road.
one of the things you touched on is, here in this building. I mean, the reality is for our current investors and hopefully future investors, one of the things that happened during COVID is we were here.
Yeah.
You know what I mean? Like we were boots on the ground here at our properties, handling that for clients. Again, we're not selling property that's outside of our immediate
vicinity.
Yep. So, I mean, I think that's something that, our future investors and current investors should be happy that, during COVID and even after COVID, we're here. We're boots on the ground. And so, the market, like you said, we're coming to you. We're coming with, we can guess what we think the rates and rents are going to be, but we want to verify, with the 500 doors plus that we have, like what are we actually collecting in those neighborhoods? And so I think that's something that, I wanted to touch on, obviously, and just a brief touch and just saying like, hey, we're here.
Yeah. So, you just mentioned, like during COVID, like our office became flexible. Now for those of you that don't know, our employee count and how things are structured here, we have, I think we're approaching 40 employees, somewhere around 40 employees, 40, maybe 50 employees across all 7 companies, some local in the building. We have, your office is just 5 down from mine. Some virtually, both in the United States and overseas. Very diverse team, different demands, different needs. Technology played a crucial role in getting us through COVID and helping us serve our clients, all of our stakeholders, vendors, residents, owners, and employees. It was a bit of a learning curve. I think actually the most recent technological change is we migrated everything over into Google. So we're now, this is not a sponsorship for Google, by the way. However, when you use Google to search what sponsorship means, you're welcome, Google. So when we migrated over into Google Suite, it was a learning curve for all of us, like trying to learn how to do the chats and the integrations and Google Drive, like things that you would take for granted and just use normally. Like all of a sudden, we're all in the entire company on the same system. Beyond that, like Zoom, we always kind of use Zoom a little bit before we switch over to Google Meet, but all of a sudden, all of the meetings are virtual, right? Yeah. We had flexibility in the office to be able to work from home. I know you have children, so you were having to be there for your children more than normally before that. And we had family and things, so being able to have the flexibility of working from home was nice.
You guys changed your lock boxes. I had to learn how to get into these properties.
Oh, yeah. You brought up, a good point here. So in the middle of this, like in January of 2020, we started kind of messing with this idea of, it was probably before January, but we started messing with the idea of auto showing, right? So instead of sending an agent out to walk the property with the potential resident when we're leasing a property, doing it on a showing box so that they're able to punch in a code, get a key, go view it themselves, put the key back. Mm-hmm. So we were kind of experimenting with a couple systems, and it was more of a like, hey, how can we spend a little bit of money but save a lot of time type thing. Right. And then COVID just put that into hyperdrive. It immediately became a big need. Otherwise, we were not going to be able to get things done efficiently. Social distancing, our governor shut down the state for like 4 months. It was a big deal where we wouldn't have been able to perform the way we needed to unless we caught up with tech. Right. Yeah, and so we put in place a couple systems that allowed us to continue to do showings, respect social distancing standards, still allowing the option to have agents show up and show the unit if needed. Of course, all precautions, masks, all that good stuff. But that put us in a much better position now, post-COVID, where we like our top leasing person isn't even local. Right. Like she does all the administrative back-end stuff and leases properties daily, right? Without ever seeing the property in person. And that wouldn't have been possible if we weren't kind of pushed that direction. It probably would happen eventually, right? We would have figured it out, but it would have been like, okay, we have a need right now. We need to be able to get there right now. I know in your end, like even you guys already use like DocuSign and all that stuff, but I've noticed that we've had less closings in the office. Yeah. More of them are completely electronic.
Yep. Online closings. So yeah,
People,
definitely
people
changed.
wiring money all over the place.
Yeah, exactly. A lot of international.
Right, lots of international recently. Yeah,
people investing here in the United States and Ohio in particular.
right. Yeah, so technology's been on our side for sure, and I think it will continue to be. I mean, we're very tech. I mean, even now, like we're in a studio inside of this office, and we have lights and flash and bang, and technology has been a real major help through COVID, and I think it's going to continue beyond that. Now that we know and we understand how powerful it can be, it's we talk about the COVID thing quite a bit, but I think overall take all of the negative and bad and the media's depiction of all of it. I think we'd all agree we're much better people and businesses, and we provide a much clearer and direct service coming out of it. I mean, I think we started two companies. I think we started two companies last year. I feel like it was two companies. Right. it may have been one, but the growth is the year of growth, and we've done quite a bit. We're on track to we're finishing up our best year ever, and next year we're already sandbagging some pretty good stuff rolling out. I mean,
awesome.
Yeah, Q1, January is gonna be killer, right? So, but I mean, that's all because we had the opportunity, right? And COVID slowed us, but didn't defeat us, and we came out better on the other side. And that's one thing that's amazing about this team of people here at Freedom Real Estate is that all of the great minds and the heavy hands, the hard workers that we have, roll with the punches. Yeah, we're able to think of the fly.
I think one thing, and you just kind of touched on, made me think of it, is that during COVID, I think we acquired more staff.
Right.
People that maybe left other jobs came here and brought their their winning personalities and brought something to the team, and so again, us as a company growing out of COVID because of maybe another company's loss or misfortune, we gained some positive traction there, and so I know that we're optimistic for 22 and that things are looking good. I think you're right. I think you nailed it. We learned a lot from COVID. We learned how to be more efficient, embrace our technology, perfect systems, and I think we're delivering a great product for our investors. So I'm really looking forward to it.
Yeah. Next year's gonna be a killer. To kind of pull this full circle for everybody, what now, right? So. I know we have a couple variants. I don't work for the CDC. I'm not a doctor. I don't have any specialized degrees in any of that stuff. I'm definitely not a doctor, man. We're not done. COVID's not finished. Okay, it's still kind of swinging as it's going down, right? So there's still a lot of space that we have to learn as investors, as professionals in the field. We're going to keep taking those punches, and we're going to keep being in the battle with you. But what can you do now, right? So first one's get educated, right? Talk to people you trust. I always extend my hand. I'm not going to put my phone number out there because I don't know who's out there watching this. So you put your phone number on the internet. I did that once. So it was a bad decision, right? But if you need to get a hold of us, you have ways to get a hold of us. There should probably be some contact information in this in our channel here. But one of the biggest things you can do to help combat and position yourself to come out better. We talked at the beginning about investors at home able to start scanning through, make some plans for what they can do with their savings account or their 401ks are now being questioned because companies weren't performing well. What they can do with their retirement, and they're starting to migrate and think about real estate investing and diversifying. The number one best thing you could do: get educated, talk to people that know what they're talking about, and diversify your portfolio. And I know we talked about that in other podcasts, but in the example of the owner that had some pains, what is going to allow him to succeed is a diversification of having different types of assets. We talk about vacancy rates. Like if you have a single family home and they're affected by a pandemic, right? You could potentially go from 100% occupancy to none, right? $1,000 of income a month in rents to none overnight, right? However, if you have 5, 10, 15 portfolio properties, doors, so single family, multifamily, get a couple duplexes, quads, larger complexes if you can. Then when you're affected by the low percentages of those that were actually affected in our portfolio,
Right.
you're still performing at a high cash flow position, and you're able to take those punches a little bit better in stride. I know that on our end, owners that have have gone through this 2020 have come out in a position where they're a little bit more empathetic to the residents too. They're like,
Sure.
oh, hey, they're late this month. Okay, well, let's just let them kind of work it out. We'll give them to the end of next month. We'll allow them a little bit of time, because it's been hard. Even if people didn't lose their jobs, it's been difficult. So I encourage our investors, our future owners, current owners, talk to Mark, talk to CJ, talk to me. Let's get you some different investment strategies going. Let's try to supplement your income a little bit.
Absolutely.
It is definitely a big deal. Multifamily is a big win. I know that's a space that we're still growing into as an organization, but there's definitely benefits in having more.
Sure. Absolutely. Agree.
Yeah. All right. Well, that's all we have today for COVID and how to manage the change and how everything's changed since COVID. But we like to end these things by saying, invest smart
And live happy.
Take care.
Thanks, guys.
Nothing on this show should be considered specific personal or professional advice. Please consult an appropriate tax, legal, real estate, financial, or business professional for individualized advice. Opinions and information on this show are not guaranteed. All investment strategies have the potential for profit or loss.